What's going on, guys? It's Jimmy here. Welcome to our daily show. We discuss everything going on here in our country that you need to know about here on a daily basis, including money, investing, the stock market, inflation, which is out of control here, the fourth stimulus package, and stimulus check update. If you haven't subscribed to our YouTube channel yet, make sure to click the subscribe button down below. It's completely free to do so. New videos come out here every day, 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. I will keep you up to date here. Because of how bad inflation is, the most recent reading from May, 8.6%, and gas continues to rise since then. Food continues to rise since then. So really, inflation could now be 9% or above. The Fed, the Federal Reserve, new predictions are coming out that they will or might, as this is a projections here, raise interest rates by 0.75%, 75 basis points here this week. Yikes. Yeah, so that would be considered a triple interest rate hike. And that should push the US dollar to record highs. Yeah, this comes as two new firms are projecting this. Yeah, so this is a lot. This is a lot here. It wasn't that long ago here, just a few weeks ago, when the Fed did their double interest rate hike at 50 basis points. Uh, Everybody started freaking out about that. Now we have people saying that they might do not only yet another interest rate hike, but now a triple interest rate hike on top of the last one. Yeah. So this affects everybody because one, your credit card interest rates will go up. Any interest rates that you have that are not fixed interest rates will be going up. So anything you have that's not fixed will be going up. Uh, most For most people, it's credit cards. So credit cards are not fixed; they're variable interest rates. They can vary literally month to month if the credit card company wants to change it. So I know it seems counterproductive here for the Fed to raise interest rates to bring down inflation, to make people pay more money to bring down inflation. Yeah, that's it sounds kind of evil. It's like a nasty double-edged sword. But in fact, the U.S. Fed, the U.S. central bank per se, has actually gotten criticized for acting too slow for raising their interest rates. Central banks around the world, including Canada and the UK, were raising interest rates before the US was. Yeah, in fact, the US was still bond buying, which is kind of a monetary stimulus. It's a different type of stimulus. It's kind of liquidity. It's different here, where they're buying bonds every month. It's not stimulus for the people. It almost shouldn't be called stimulus because it's completely different. They're buying bonds every month. It's liquidity for the market. Like I said, completely different than like what normal people think of stimulus. Well, they were continuing to do that literally up until right before they raised interest rates. So it was kind of like they were going this way, going this way, going this way, and then all of a sudden they were like, "All right, well, let's throw the Titanic in reverse, and then we're going back this way." It was like, what was the Fed doing? What was the Fed doing? And it was just like, yeah. And the problem was is that I get that the Fed didn't want to pull the rug out from the markets because everybody was just kind of, or at least the markets were used to the the easy money. Of course, none of us get the easy money with the bond buying and it's the banks and stuff like that that get that easy money. But yeah, that's the problem. And that was what also kind of heated up the inflation a little bit. But really, this happened all around the world. It wasn't just here in the U.S. as well. So not that I have any allegiance to the Fed or anything. The Fed is not really they're not really Democrats or Republicans. But remember, this kind of happened all around the world, and central banks all around the world are now raising interest rates. So it is kind of a double-edged sword that we have to do. And there's going to be several more interest rate hikes this year as well. Yeah, so if you have any credit card interest that you're planning on paying off or anything like that, it's a good time to do it because credit card interest rates are gonna rise. If you've noticed, home mortgage rates have been rising. HELOC rates will rise if you have a HELOC, a home equity line of credit. That's not fixed. Some of those are variable. That will be rising as well. Um, a good thing for something like this is that savings will be rising. Money in savings account will be rising. Savings bonds will be rising. Bonds, bond interest rates will be rising in the future. I bonds will be rising if you have government I bonds or if you want to go buy them. They're paying a tremendous amount right now. It's 9% or something like that. So yeah, the government's paying out a healthy amount. The IRS is paying out a healthy amount on money that's for late money. If the IRS owes you a tax return and it's late, they'll be paying you higher interest on that. Yeah, pretty cool. Pretty cool. So it's a double-edged sword. It's a double-edged sword because interest rates are going up. So if somebody owes you interest, like the IRS or the bank, if you have money in a savings account instead of getting 0%, literally savings accounts were paying 0% not that long ago, or 0.25% or something. Those are going to start creeping up as well. I mean, they're not going to like dramatically go up, but it wasn't that long ago. We go back several years ago. There were money market accounts, which is basically like a savings account, pretty close, uh, where they were paying 5%. 5%. That's a lot. That's a lot for might not sound like a lot, but 5% for a checking account or savings account is a lot. And that was, I don't know, 10 years ago or something like that. But yeah, I remember those days. So those were pretty cool days. But that's the double-edged sword of interest rates. But it has to be done. It's going to help bring down inflation. And remember that central banks, Feds all around the world are doing this. Our Fed actually got criticized for doing it too slowly. The problem here now is that are they going to do it too much? It's a fine line here. If I was the Federal Reserve Chairman, it's a hard thing here because it's like you got to try to bring inflation's still going up. You got to try to help bring it down, but you also kind of want to not crush the economy, which is it's that K-shaped economy right now. The economy is actually doing well in that the fact that the government's taken in trillions of dollars, billions of dollars of extra surplus money. Remember, the government, the CBO, actually, the Congressional Budget Office says that they're going to be able to pay down over $1 trillion of federal deficit. They said up to $1.7 trillion of federal deficit because of how much money the government's taking in of additional tax revenue right now. And really, that's just one piece of it. Think about how much extra money they're taking in as well through. That's just one thing that they're going to pay. All these states are taking in extra money. That's part of the reason why these states are paying all these stimulus checks. So, and that's because a lot of people have gone back to work. Unemployment is at 3.6%. It's almost at a 50-year low. So that's part of the reason why a lot of states are doing stimulus checks, tax rebate checks, lowering taxes, pausing gas taxes, Well, also because gas is ridiculously high, you know. So yeah, there's a lot here, but inflation's going to be high. It's almost surely for the rest of the year, for sure, almost for sure, and you know, it's a problem. And as you can see here, inflation could hit 9%, probably in June. To be honest, I mean, it's really and price increases would have been partially avoidable if the Fed had acted sooner, top economist says. Yeah, this is right here from Business Insider, massive headline. But hindsight's 2020. I mean, I have no affiliation with the Fed. They're not Democrat. They're not Republican. In fact, the head of the Fed has been there for many years now. Um, it's a tough job, man. It's a tough job. So what are you gonna do, man? Hindsight's 2020. It's like being an armchair quarterback, saying coulda, woulda, shoulda, right? And then when you raise interest rates, you get people complaining that interest rates are going up. They have to do it now. It's there's no ifs, ands, or buts. There's no you literally don't have a choice. The question is how much and how long is the only questions now at this point. And then you got inflation so bad that even some of the most far left Democrats, like AOC, Alexandria Ocasio Cortez, decline to endorse President Biden for 2024. Yeah, check this one out.
Before we go, I just want to ask about President Biden. He is saying he's going to run again in 2024. Will you support him?
If the president chooses to run again in 2024, I mean, first of all, I'm focused on winning this majority right now and preserving a majority this year in 2022. So we'll cross that bridge when we get to it. But I think if the president has a vision, then that's something certainly we're all willing to entertain and examine when the time comes.
That's not a yes.
Yeah, I think we should endorse when we get to it. But I believe that the president has been doing a very good job so far. And, should he run again, I think that I think it's we'll take a look at it.
Okay.
But right now we need to focus on winning a majority instead of a presidential election.
Congresswoman, thank you so much for joining me. I appreciate it.
Yeah, so it's just President Biden approval rating at its historic low, or pretty much around there. Inflation just ridiculously tough right now for everybody, and the question is how long is this going to last? Also, what's interesting here is if they raise interest rates by 75 basis points this week, you should see here that should push the US dollar to record highs here recently. So you see here based against other currencies. So you could see here when they do this, you could see it moves. So it should actually make our US dollar stronger versus other currencies, which is interesting as well. And this would be the largest rate hike in 28 years to tackle scorching inflation. So it's not like this has never happened before. They did do an interest rate hike this large 28 years ago. Yeah. And this would move the US dollar to a fresh high against its major currency rivals. And you got to kind of think here with the dollar being so strong and with so many people hurting right now and the government taking in so much money and $800 billion of stimulus money already approved by Congress and just sitting there in government bank accounts. Would another round of stimulus checks help Americans cope with inflation? Especially as so many states are sending out state stimulus checks right now, giving back to the people. Would this help on a federal level here as well? Especially because a lot of people blame the federal government or the president for this. Um, Yeah, so you can let me know your thoughts here in the comments. But they have a lot of stimulus money that has already been allocated, 800-ish billion dollars, that's already been passed by Congress, already been approved, and is just sitting there. Same thing with the states with the $350 billion of money that was given to states. A vast majority of that money is just sitting there in the states' coffers as well. Yeah, so a lot of states are giving out stimulus checks, tax rebate checks, property tax rebate checks, pausing the gas taxes, et cetera, et cetera. We're seeing a lot of good things done by states, but realistically, they haven't even used nearly half the money. Probably not even 25% of the money, to be honest. It's almost impossible to probably figure out how much they've used. Um, but when you look at like the Pennsylvania governor wants to use for the $2,000 stimulus checks, he says that for the state of Pennsylvania, that would cost $500 million, and they have $2.2 billion of stimulus money from the last stimulus package just sitting there in their bank accounts, in their coffers, whatever you want to call it. Right? It's an account. Okay, so that $2,000 stimulus check that the governor wants to send out would only cost 500 million. He says so. That's only 1/4 of the stimulus money that they have. That's if they send out a $2,000 stimulus check. Yeah, so that kind of makes you wonder, like, wow, they got a lot of money, these states. What are they gonna do with it all? Why are they sitting on it? Why aren't they using it? Yeah, so it's time to take action. Let's go. And that's why a lot of these states, I think it's Indiana, Governor Holcomb is like they sent out one check already, and now they're considering another check. I think we're going to see a lot of states do that. California sent out a check last year, which was a pretty big check, $600 and $1,100 for children, or $1,100 if you had a children, an extra $500, and now they're considering another check this year. You know, and really, that was $600 was the size of the stimulus check from the federal government, with an extra 500 on top of that for children, and now an additional check again this year. That's a lot. That's a good amount. I mean, and now so really, Maine $850, Alaska was it 2,600 or 3,200? They had a couple different proposals there. Um, we got a lot of states doing this stuff. So, and really, they're they're continuing to bring in more money, more surplus money, extra money, more than they're spending. So I'll keep you up to date here with everything, federal money, stimulus money, as well as what's going on here in our country. Let me know your thoughts in the comments. Make sure to subscribe down below to our YouTube channel. It's completely free to do so. After you click the subscribe button, click the bell icon that appears next to the subscribe button so you get notifications as soon as we go live, which is every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. You can click here next to see my newest video on $2,400 Social Security raises. And this is my next video on stimulus checks. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.